Positioning yenye nimekaa ni mzuri.
Excellence doesn't happen overnight. At 21st Century Innovation, and now there is no limit. At the United Bank for Africa, we are committed to delivering the best for you. We have deep roots in Africa. Across our continent, we drive financial inclusion, trade and entrepreneurship. We operate in the United Kingdom and in France. We are the only African bank with a national banking license in the USA. We understand the importance of the Gulf as a hub for global trade.
Hey Leo, split the bill into 4, please.
UBA is built on our cutting-edge technological infrastructure that guarantees not just to take Africa's talent and perspective to the world, but to bring the entire world back home. Because the one thing you can trust is we will always be there for you. UBA, Africa's global bank. Excellent.
Hello, a big hello, and welcome to UBA's Business Series this month. My name is Amos Ngahu, and in this day and in this live, we will be talking about loans. And the big question is the loan you're looking for the solution or the ideal solution to your problem or your situation, whatever you want to do with that kind of money? As I said, my name is Amos Ngahu, and welcome to this live. We are live on YouTube, we are live on Facebook, and all the channels are UBA Kenya. Please don't forget to subscribe and comment, and let's interact, and we will be able to answer your questions to the best of our abilities. I just want, first of all, to welcome everybody, and I want to welcome you with this particular question. Let's start. Have you ever taken a loan and much later, after you did whatever you did with the money, whether it was consumption or business, and after sober evaluation, without emotions attached, without looking at anything else, and you looked at it and you saw that you made a mistake? And today, I just want to share my story. I don't know how we are doing on our viewers, but I'd like to take a few minutes to just share my story. And this story is about myself when I was 26 years old. And I'll ask you as my viewer to forgive me, because you will see some of the dumbest mistakes I've ever done. So I am 26 and I'm working for a company, and I'm in marketing and sales. And this company, there's a level of income that you got that you now apply a car loan. And in fact, my boss was so excited to do the paperwork for me, not knowing I did not even have a driving license. And after that, after applying for the loan, I saw I qualified for 650,000 Kenya shillings. And in this 650,000 Kenya shillings, it was the total, so anything else would come from that package. But the car I was looking for was going for 850,000 Kenya shillings. So in case this loan was to go through, I needed a top-up of 200,000. And then I went ahead and I looked at my savings SACCO. We call it SACCOs here in Kenya. And if you're in a SACCO, you know that some of these products that are set in a way that you can borrow 3 times your total savings. So I actually borrowed, I had a savings of 120,000 Kenya shillings, meaning I would borrow 3 times. That is 360. But remember, I only needed 200,000 to do what? To top up. But when I went to this SACCO, and they were more than happy to give me the loan. And I got the entire loan. I took the 360 and I bought my first car. And after I have paid the 200 from the SACCO, now I have my car, but I have a surplus of 160,000. What did I do with the 160,000? I remember I was living in a house where there was no parking. So I had to move into a house where there was parking, meaning I had to pay more rent. So my rent came from 3,500 Kenya shillings to 500 Kenya shillings. That's a whole increment of 5,000. Now, getting into this house, it was very big. It was huge. So the couch I had to go and I buy a new set of sofa sets. And it was 2 bedrooms, so I even had to buy more furniture for the extra bedroom. And lo and behold, the day I saw my first deduction, the car loan was deducted from my payslip. The SACCO loan was deducted from my payslip. The direct payment increment of rent I paid from my net income. The insurance for the car was deducted from my payslip. And when I sat down, after the first 3 deductions, that's when I realized that my decision was not very wise. And today, as we look at the kind of loans we look at, do you have an institution where you're borrowing from, where they take time to give you advice or to inquire, not to just bottleneck all the clients who are applying for loans, but just to be keen? Because as UBA, the first thing they do is, first of all, sit down with you and look at the projects you want to take up. Are they profitable? Are they able to pay back the loan? Because remember, there's a saying that says, any financial institution lending you money without financial advisory is actually an accomplice. So UBA have realized that if you make good decisions and you grow, they grow with you. And that is why it is important for you to get advisory on the kind of investment you're taking. So when I look at UBA's advisory skill, if I had approached them, or any institution that I had approached then, would have helped me evaluate and see, probably I would have looked for a car that would fit that budget. Probably I would have bought even a second-hand car as I waited to grow my qualifications and to grow the limits of the loan. So it is very, very important for us to ask ourselves that. Now, what major lesson did I learn out of taking these car loans? Out of taking these loans, because more or less all of them were car loans, because the insurance was a car loan, the SACCO was a car loan, and now the main car loan from the company. So the day I realized that for the next 4 years, I did not build anything else. I was just paying debt on an asset that is depreciating. So from your comments, I want to know, I asked a question earlier. What loan have you taken? And after evaluating, you're questioning. And let's say you didn't even waste the money. You're thinking, could I have leveraged? Could I have leveraged on other people's money? Let me give you an example. When you're in business, you realize that there are some suppliers who supply goods for a certain duration of time. And they say, my policy of being paid is 10 days, it's 20 days, it's 90 days. And they also, because some of these suppliers also have other suppliers, because it's a whole chain, they also extend the same. So depending on what I'm given by the person I'm supplying to, I'm also giving the same to the person supplying to me. Meaning, if I'm in the supply chain, I avoid going for debt. Because sometimes debt can be can be a huge inconvenience to your business. So I'd like to know from your comments, is it a debt that you've taken and you're feeling, I shouldn't have taken this debt? Because let me tell you something, 3 months into that debt of taking the car loan, I was thinking, do I really need this car loan? And what I haven't told you guys is the first month was incredibly expensive, because I was buying an asset basically to show off. So my title in the village had changed from the young man who they knew to a mzee. And for a nice Kenyan language is Bazoo. And the status really mattered. I did not put tint in that car so that people could see the owner. They could see me nicely, and everybody who wanted, in fact, I remember my mom was going to the market, I would take her, wait for her in the car, put loud music so that people could tell the son is here, and she would tell me, hey, this guy is nice, and we'd go to the village. I think I did 3-4 trips that month to the village. But after 3 months is when now it shocked me. I haven't even told you about the fuel budget that I incurred that particular month. So we have to be very careful about why we take this debt. And like I said, one of the things you need to consider when you're getting a loan is, who are you getting advice from? And in Kenya, we are known that even predatory lenders are now here because they know we just look for any reason to get the loans. Some of us just get the loans because they're available, not because we really need them. In fact, going by the data, according to CRB, is about 4.2 million Kenyans that have been listed negatively. And a good percentage of them, it is debt that has gone to consumption. We're always bashing our politicians or our governments that they are taking money for consumption. But I believe a lot of Kenyans, we are taking loans for consumption, not really for investment. Because a good percentage, like I shared earlier, they're taking money for consumption, and which is not a very good idea, because at the end of the day, you cannot borrow your way out of poverty. So I'd like to take this chance to take your questions from the comments below as we take a small commercial break. And remember, the question is, have you taken a loan and much later it hits you that probably I did not need this loan? So I'd like to see your comments if you've done that evaluation, or you're about to take a loan and you've not sat down with someone to have a conversation about the purpose of your loan. So we'll be right back after the short break.
Doesn't happen overnight. At 21st Century Innovation, and now there is no limit. At the United Bank for Africa, we are committed to delivering the best for you. We have deep roots in Africa. Across our continent, we drive financial inclusion, trade and entrepreneurship. We operate in the United Kingdom and in France. We are the only African bank with a national banking license in the USA. We understand the importance of the Gulf as a hub for global trade.
Hey Leo, split the bill into 4, please.
UBA is built on our cutting-edge technological infrastructure that guarantees not just to take Africa's talent and perspective to the world, but to bring the entire world back home. Because the one thing you can trust is we will always be there for you. UBA, Africa's global bank. Excellent.
All right. So some of the questions we are getting, someone is asking, with a salary of 25,000, they want to borrow a loan. And I saw one of the billionaires that I follow, and he said that if you are getting a loan to venture into a business you've never been into, and with no data that you're referring to, that could be one of the dumbest things you've ever done. And I don't know where this misconception came from. Business is nothing but an idea. Business is not capital. Let me repeat this. Business is nothing but an idea. Business is not capital. I'll give you a scenario of one time things were so bad financially for me that I was struggling. You remember the car loan that I had taken at the age of 26? Now this was another car loan. I never learned my lesson. So I had a loan balance of 450,000. And the deductions are so much, and I'm just wondering, I can't even afford to fuel my car to a point where I was switching cars with my wife, but I would look for an excuse to switch cars, probably tell her tires look like they need pressure, you know. And I would switch cars, but I realized I was in denial. I could not afford some of these loans. And one of the things I did was come up with a list of the things I could do to give me, even if it means 500 shillings in a day. And what I did, I started writing them, in no particular order. So I realized I could coach basketball. So I put basketball. I realized I could give talks. I wrote giving talks. My father used to service and sell fire extinguishers, which is a skill he taught me early. So I wrote it down. So I wrote down that I could start, other than giving talks, I could charge for consultancies. I started putting it down. I realized that a lot of people ask me, do you have a reference material that we can study from or learn from? So I decided to write a book. And then the issue of doing real estate, where you could buy a plot, develop and sell. By the time I was done with that list, I had 9 sources of income. 9 sources. Some required heavy capital, some required little or nothing in terms of capital, but for me to show up. So I wrote them in that order. Which of these activities do I need to just show up? Basketball was on top because I play basketball, so I'd coach and work out at the same time. Then there was coaching. I go give talks and I would appear. And then I put them in that priority. The last one was the capital intensive one. Do you know the top 3? Because of the small consistency, the small consistent incomes, I was able to clear my debt of 450,000 in 3 months. Meaning, I could be able to build that up and start something else that required capital. And that is how I was able to publish my book. That is how I was able to start my business of buying land and being able to construct in small scale. So back to this person's question. What is your drive? Have we evaluated our money culture to understand why we always feel like we need to borrow? Let me give you an example. If you've grown up in Africa, and if you've grown up from, you have a background of a middle income family, some of us were being sent to a local shop to buy things on credit. You'd be told by your mom, go to so and so's shop. That time they had a book and they would write the things that your family has taken. Not that your parents didn't have money at that particular time. They just wanted to pay their bills at the end of the month or at the time that their money came in. And I realized, for me growing up, I realized it is okay to borrow something as long as you can repay, but it's for consumption. And that is where you'll find, even today, some of us are going to take these digital loans and an ATM is near you. You have cash in the bank, but you just want to go to your digital loans and pay up. And some of you think that that limit you have in the digital loan is your money. That limit is not your cash. And we've gotten used to it. You need to start at asking yourself, even those digital loans, do you really need them? We have to evaluate our culture. Because the moment you do that, the moment you're borrowing the small monies, you already form a culture, you form a habit. And I like saying this, it's a Warren Buffett quote that says, the chains of habits cannot easily be felt. The chains of habit cannot easily be felt until they are too heavy to be broken. So you're getting into a culture of borrowing for no reason. So even when you set up your business, you'll always be borrowing for a new venture. You lose your money, but you're used to it. So make a habit of evaluating your culture. And as you evaluate your culture, where you got your borrowing culture from, start also getting into a culture of questioning things. Do you look at the fine print of the loans? Here at UBA, the loans are given at a reducing balance. Do you know some of the loans you're paying? Do you know whether you're paying at a reducing balance? Because they'll tell you it's 1% a month, but is it on a reducing balance? Because at the end of the day, you have to look at the fine print, evaluating your culture. Part of also evaluating your culture is, who do you take advice from? You cannot be borrowing, having the same borrowing. Probably you've been in your traditional bank that forever has very high interest. Have you taken an initiative to look around? Some of these places that you borrow from have fixed rates. It's not a reducing balance. So it's a culture. You have to evaluate. where are you getting, why are you behaving the way you're behaving around loans. All right. And then the other thing is, how do you handle the people you owe money? One of the things that we had a discussion with guys in loans at UBA, and one of the things I liked about it is that this is life. Life happens. You might get to a place whereby you're in business and your business is doing badly, or you have lost your job, or during COVID you got a reduction on pay. It is and UBA has put a very clear line that you can come and tell us, listen, I was paying this much, now I have this income. In fact, the communication from HR looks like this. Can we negotiate? And it is possible to negotiate. Don't be a Kenyan and switch off your phone and remove your battery, because that's the thing that what guys who are defaulting are good at. Don't default. Okay, always have a leeway of communication with the people you owe money. They say when you add weight, gaining weight while you owe me money is a sign of disrespect. Please make sure you communicate and you're able to look at having conversations with people you owe money. So when you look at that, do you still need that loan? Do you still need that loan? I'd like us to take some more questions from live, from any of the platforms that we have. Any questions that we have? All right. So also as you evaluate your money habits, up to what extent does your loan, how is it protected? How does your financial institution protect themselves? So a lot of loans, and I'll speak from what I understand from the loans from UBA, they're also insured. And I picked something, and I'd like you to inquire from where you're borrowing from. Are the loans you're taking insured against, because they're insured against death, when death occurs? But I noticed something unique about UBAs. They're insured in case of retrenchment. Retrenchment, yes, when you have to be laid off at that particular time. So please evaluate some of these things, because this will be also good points for you when you're looking for a loan. But most importantly, and what I've picked from UBA, is that they offer advisory. And I repeat, any institution lending you money without financial literacy, without advisory approach to you and sitting you down, yes, we want to know what you want to do with your money. If they don't do that, then they are an accomplice. So you have to look at what value they are adding. And I'd like also to take note that a live like this one, where we sit down in the business series and we're able to discuss this, and not because they want to limit your borrowing, but they want to help you do that. Okay, so I'd like us to take a couple of questions, but we can also take another short break as we go. Yeah, I'm being advised we can check on the questions. Let's have a look at the questions. Is it okay to go for a buyout or refinancing of debt? Awesome. That is Sarah Jerotich. So allow me to discuss two things: a buyout or refinancing. First of all, let me explain three ways of dealing with debt. One of them is, and I'll speak about it towards the very end, that is the digital loans, how you can be able to bring them together and come out of it. And I'll also like to talk about refinancing and also consolidation. So refinancing, if you are paying a certain loan, and that loan you discover there is another source. Let's say you are with another financial institution and you realize that the conditions of the same loan, the same amount, are better at UBA. What do I mean? In terms of, here it's a reducing balance. All right. It is if you have a meeting with the person who's offering, let's say at UBA, and they see they can be able to buy out that loan and give you better conditions, that would be the most ideal. Refinancing normally comes in when, for instance, let me give you a very good example that I normally share. I was talking to these officers, and one of the things I noticed was some of them, there was one particular guy who used to get a car loan, like the one I was taking. But this person, they were being given, the employer had an agreement with their bank. And at that time, there was no capping of lending rate. So they were getting car loans at 6%. But then the SACCO was offering 12%, and other banks were offering at 13%. So what this person decided to do is that they said they will never borrow from other sources, and they applied for a car loan. But they would put all their resources to make sure they finish the car loan within 8 months to a year. And then they would resell the car. And they made sure, I'm not doing advertising for any brand, but they made sure they bought, yes, that one that has a resale. And they would resell it, take that money and go buy a piece of land. The next one, they are developing that land. They take 2, 3, 4 cars to develop that land, because they would sell the cars and develop that land. So they were actually using one cheaper loan to do, they were using a car loan to do what? Development of a property. So that is refinancing. So it is for us to be able to know, out of all the sources that are available to you, which one is the most convenient? The other part of dealing with loan, that is refinancing. The other part of dealing with loan we needed to discuss is consolidation. And thank you so much, that is the person who's asked that question, is something we call consolidating. And in this consolidating, we look at, you're already in debt. You're on digital loans, you're on a Shylock, you're on a SACCO loan, you're on a bank loan. So you have to figure a way out. And some point I've seen people having negative pay to a point that they're using a credit card to survive. Yes, that's another loan. So what we do, we try to consolidate. Based on when you started these loans, how far are you and what is remaining? And in one scenario, we were able to see how we can be able to see if you have a bigger salary, and let's say your bank can be able to advance you, prolong the longer loan, and be able to pay all these other inconvenient loans like the Shylocks, like the digital loans that can actually put you in trouble. That is consolidation, picking the most convenient loan to be able to settle all the other loans so that you're out of debt. And that would work in very, very, very well, especially so that you have a prolonged payment period and you have cash flow back, okay? And then there's also another question here of, before we go to the third, other question, there's the part I wanted to talk about digital loans. Digital loans, especially Kenyans, we found ourselves in so much trouble. So one of the things I can tell you is that consolidate them together. Once you consolidate them together, you know the amounts. Please fix them. If you're employed, fix them to the day you're paid, so that you can pay all of them and continue borrowing immediately lesser and lesser of what you've been borrowing previously. So if you've been, let's say you have a total of 4 apps that you've borrowed, let's say 20,000, a total of 20,000. So you can actually pay the 20,000. I know there are charges in between there. Pay the 20,000, but for you to survive that month, borrow like 16,000 for you to survive. Then come the end of that month, pay the 16,000, borrow like what, 13,000. Go reducing, and then eventually, if you're not using them for investments or business, then it is good that you move out of them. Then someone is asking, is it okay to use savings to start up a business? I always tell people, it's always good to leverage. Don't pour all your capital in business you have no experience in, because you have no data to refer from. I tell people, go in small. Even if it's production, go in small. I tell people you'd rather have a good problem, that there is a higher demand than what you can be able to supply, because you don't want to do that, especially depending on your age. One of the worst things I've seen is that a lot of people who retire and they get their heavy pension, starting businesses, and they've never done that for their entire lives. All right, okay? So it's important for us to be able to ask ourselves, how much do we know about this kind of business that we want to invest in? Okay? We are taking more questions. All right. All right, someone is asking interest rates bank on a reducing balance. I expound. Oh, now, this is what a reducing balance means. So assuming I have borrowed 100,000, all right? So if it's a flat rate, it will be, the interest will be, and let's say I'm paying 10% interest, it will be 10% times the number of months I'm paying. That will be the total interest. But what happens on a reducing balance? If I have already paid my first installment, let's say I've paid 10,000 and I have 90. So the next month, the interest will not be on the initial capital, it will be on the balance, which is 90,000. So that is what reducing balance means, okay? SACCO loans versus bank loans. Now, this is a huge debate that I've seen, but I'll say this. It's about convenience. And remember, I have, and the good thing that I'm here is that I've also done member trainings for SACCOs. And I'm here working with the bank, with UBA. And part of what I tell people is that look at what is convenient for you. If someone is taking time to advise you on the kind of, or to question what you want to do with your money, and not just question, to be able to see if it is something that you can invest alone in, then sometimes go with that particular institution. Two, if you look at SACCOs also give you a discipline to be a regular saver, so they will give you an opportunity to build and borrow against your savings. But here's the thing. What if I have a project that has just come in and I bank with UBA and I need money right now because this opportunity might be forgone? So it's important for you to ask yourself what particular need or what vehicle best suits you at that particular time. Okay? So should I buy my first car cash or buy a loan? You remember the story I gave you guys? It personally depends, because if you're getting into if your car, because sometimes a car can be an asset, let's be realistic. You could be in the business whereby you're incurring so much cost on transporting, let's say, your merchandise. And then you realize that cost per month can actually be able to pay for a car loan. And then that would be ideal, because you can also use that car even for personal uses. But if it is just a car for just using, I'd prefer sometimes just take time. Work, do a bit of savings, and do work with a car that can actually take you from point A to point B. Don't just borrow a car for image like I did. Okay. Another question, if we can have this. Is it okay to go for buyout or refinancing of debt? Yeah, that one we've answered. Is it okay to use savings to start a business? That one we have also answered. But I'd like to... Is it okay to have a startup? Okay. I'm not sure whether what Gilbert Brown is asking, how to get, but that is it. So, how to get the loan? Guys, just walk into any UBA branch, and I'm sure they can be able to assist. Just have a conversation with them. And I tell people, even when I do, because I've been a financial coach for the last 16 years, I want to get to know you. Before, if I was the one lending you money, I want to know what is your culture? What is your culture? Because a lot of business people, and I know I'm speaking to a lot of people when I say this, a lot of businessmen, we are very good at diverting our funds from the intended purpose. If I borrow money to expand my business, chances are I might use that money, a bit of it, not all of it. Yes, I'll expand my business, but I might use it for personal use. That is why it is very important for you to sit down with someone and be very candid. My name is Amos. I want to be on my socials. I want to buy a phone worth 250,000. I want a light. I want even bigger cameras. I want mics. And this is where I am. This is where I want to go. That way, we can actually say, instead of taking the entire loan, can you take first of all 100,000 instead of buying the latest phone? Just buy the one that came out last year, and that way you can be able to still shoot content at a lower budget, so that when you get clients to advertise or to post content on your page, now you can be able to advance slowly by slowly. So it is always good to have that conversation. And I'll say this, still on entrepreneurs and guys who are starting off businesses, we are very lonely. Some of the things you want to venture on, some of us have no idea. Even as a bank, even if you come to the bank, they have no idea where that vision is going. So sometimes it can be lonely. And don't just risk it all. You cannot just go in something that has not been tested and you just go in with everything. So it's important for you to be able to sit down and have a conversation. I may not, even if you come to me, I may not have to understand everything that you want to do, but there are some basic fundamentals that we can look at and see. Can this business be fed by something else other than the loan? Because remember, the question of the day is the loan that you want to take up the real solution to your problem? And I'm sure after this conversation we have had a couple of thoughts to ponder on. So I think we can continue with the questions if we cannot take a commercial break. Any question as you take a commercial break?
Doesn't happen overnight. At 21st Century Innovation, and now there is no limit. At the United Bank for Africa, we are committed to delivering the best for you. We have deep roots in Africa. Across our continent, we drive financial inclusion, trade and entrepreneurship. We operate in the United Kingdom and in France. We are the only African bank with a national banking license in the USA. We understand the importance of the Gulf as a hub for global trade.
Hey Leo, split the bill into 4, please.
UBA is built on our cutting-edge technological infrastructure that guarantees not just to take Africa's talent and perspective to the world, but to bring the entire world back home. Because the one thing you can trust is we will always be there for you. UBA, Africa's global bank. Excellent.
So, welcome back. As we conclude, we need more questions because we should be winding up soon. But I wanted to also directly just talk to the person who was saying that they earn 25,000. You also need to be careful, but that there's a 2/3 rule. A lot of employees look at that. But also the bank will want to look at half. They want to leave you with half of your income. So it's important also to see if someone is concerned about your welfare, because at the end of the day, we are looking at also affordability. You cannot just be taking loans because you want a project and yet you're struggling. You cannot be struggling like that. So it's important to understand that kind of a setup. All right. The other thing we'd like to look at is someone is saying they would like to take a loan of 2.5 million to invest, 2.3 to build rentals, and they said rental cars, and 0.2 million to save in kids' school account. I have a problem you taking a debt to take your kids to school. Personally, I'll have a problem with that. I'm not sure whether you have a deal with rental cars if you're buying cars, because I know it's a lucrative business, and especially if you have ready clients that can be able to make use of your vehicles. But the challenge I have is savings to take your kids to school. You see, you could be borrowing a loan, let's say at 11 or 12%, but you're putting it in a savings account that is giving you 4% per annum. what are we really doing? We're incurring cost. First of all, there's something that I have learned over the 16 years I've been a coach, is that you have to understand the seasons. A lot of us are living our lives, living the lives of our children for ourselves. So you'd rather borrow for your kid to go to a certain school. And yet, the ones that are even in public schools will eventually survive and do much better than your child. So one of the things I tell people, please understand your season. And if you're in that season that you feel like you need to scale down for duration of time, then you'll upgrade, then for me, that's a good thing, because you don't want to miss the lessons. You don't want to miss the lessons that your kids need to learn from a public school. And for me, even when we started, I've grown up, and I shared this when the GMD was here at Kempinski. And I shared that some of us grew up in the village. And some of the things we did was, we would hide, my brother and I would actually hide our shoes in our bags when we go to school, so that we fit in, because very few kids had shoes. The others had sandals. So if you had a nice shoe, you had to hide it so that you fit in. And it gave me a vital lesson to know that it's actually a privilege knowing what other people are going through. So do not take a loan to put it in a savings account unless it's giving you a higher return than the interest rate that you're repaying. And still, just to touch a bit on, if you're buying rental cars, do you have a ready client? And if clients are telling you they are ready, do you have an option of hiring for once? Hire a car and test it for a month. You know, see if they can be able to give you the returns that they're doing. Because some people even take loans. You've taken a car loan, you've been told this number of cars are needed, but when you get there, you realize even the returns are lower, and you've already bought your cars. Then you start selling them at a loss. Please test your businesses first, okay? But don't take a loan to get yourself a children's savings account, okay? All right. So let's see if they have some more questions. LTDs, unsecured, repayable. All right. I'm looking for more questions.
Types of SME loans.
Okay. So, oh yes, we have types of SME loans. This is yes, these are the loans offered at UBA. So they are SME loans, they are term loans, meaning that for a duration of time you can borrow that kind of money. And then you have temporary overdrafts. And these overdrafts are basically you getting something extra on top of what you have in your account. You're writing a check somewhere, there's money waiting to come in. Let's say I needed to pay a supplier or a deposit to something I'm paying, and I have 10,000 on my account. So the bank can actually, and they need 15,000. So the overdraft can be temporary as long as other money comes in. So those are the offered products. And then you have guaranteed, that is guarantees, bank guarantees, I suppose. Yeah, so the bank guarantees that you can be able to venture into and make sure you maximize. And one thing I like about UBA is they will take time to understand you. They will take time to take you through advisory, because let me tell you something, even running financial literacy, there's a huge gap. A lot of us are running on autopilot. You don't take time to understand, because we get the excitement of money. And sometimes I even see that some guys, they confuse turnover for profit. So when you sit down with the banker, they tell you, okay, this is your turnover. Your turnover is what money has come in, okay? But how much of it is profit, okay? And that is the profit. They will tell you, out of this profit, if you can keep this and we take this and we can be able to access a loan to expand your business, that is someone who means well. So it is important for you to understand that for UBA, one, they will give you advisory as you engage about your business or the kind of reason that you want to borrow from. They will be able to negotiate with you in case there are hitches here and there and there's a delay in the repayment of your loan. And then they will also be giving you loans on a reducing balance, meaning that you'll only pay interest for what is due on your end. And then also the insurance covers retrenchment if you're employed. So I'd like to take more questions, one or two more questions, then we can be able to wind up. And like I said earlier, please like and subscribe the YouTube channel for UBA Kenya. Follow the socials. We'll be tagging some of the content that we do with UBA. And follow and subscribe. See if we have one or two questions that we can be able to look at. All right. One more question. Yes, and someone has asked. I am a young person. I'm just looking at, can I survive without a loan? Yes, it is possible to live without a loan. It is possible to work without a loan. And I know there's one of these guys I follow. He's a big guy on financial literacy. And we have to understand that there's bad loans and there's good loans. And based on cultures, you'll find that in some countries like Nigeria, people save up to build a home. But here in Kenya, things are different. We literally borrow, even for I don't want to talk about drinks. We borrow for entertainment. And here's the thing, meaning there's a lot of accessibility to debt. And we need to be very, very careful and draw the line between debt for investments and debt that is based on consumption. Because that is what is going to destroy us if you're borrowing money for consumption. Okay? So be very careful that you're asking yourself, whatever I'm borrowing, is it going to direct consumption? Or is it going towards investment? And remember what came out during COVID, when there was lockdown. You guys remember when there was lockdown? A lot of data came out, and a lot of us Kenyans were borrowing a lot on a certain app on Fridays between 2 p.m. and 4 p.m. And your guess is as good as mine. This was money that was meant for entertainment. So just be careful as we do that. And on that note, would like to end our live to this evening. I hear there's one more question. Let's see the question. So remember to follow UBA at UBA. You could be here watching this live. Follow UBA Kenya. And subscribe to the YouTube channel, because we'll be doing this on a monthly basis. All right. All right. So also in motion. All right. Okay. Joe Kenya is asking, for how long do you need to save with UBA before you take a loan? If it is a salaried person, as soon as your first salary is in sight, then you qualify. All right. And if it's a business, once you open the account after 3 months, you can be able to access the loan. And it's 3 months of assessment. You see, it's the same question I was talking about. If you're in business, if for 3 months I can be able to see, yes, your turnover is good, can we evaluate how much of it is profit? How much is it, you can be able to use for that? Because that is the actual proper evaluation. I'd be worried if I was in business and someone gave me the loan immediately. I'd be very worried, because these are people who may not be caring about my business. So on that note, I'd like to thank each and everybody for yes, each and everybody for watching us. And there's a shout out here. Here there are lunges in the house. So someone called Dimple D. A shout out goes to you. And then someone called Judith Kwamboka. That's a shout out to you guys. Please subscribe. We'll be doing more of this, hopefully. And make sure you follow UBA at UBA Kenya on all the socials. Subscribe. On my channels, my name is Amos Ngahu, but on my TikTok is Money Gossip. Money Gossip, the fans are here, and we'll be able to learn from each other. And this has been UBA's Business Series for the month of November. Hoping to see you in the coming month. Stay safe. Remember, money does not stay where it is needed. It stays where it is respected. See you later.
It doesn't happen overnight. At 21st Century Innovation, and now there is no limit. At the United Bank for Africa, we are committed to delivering the best for you. We have deep roots in Africa. Across our continent, we drive financial inclusion, trade and entrepreneurship. We operate in the United Kingdom and in France. We are the only African bank with a national banking license in the USA. We understand the importance of the Gulf as a hub for global trade.
Hey Leo, split the bill into 4, please.
UBA is built on our cutting-edge technological infrastructure that guarantees not just to take Africa's talent and perspective to the world, but to bring the entire world back home. Because the one thing you can trust is we will always be there for you. UBA, Africa's global bank. Excellent.